Let's watch this video. 5 stocks I'm buying now in March 2025.
S&P has been crashing for over a week. The bears are screaming recession, but March 2025 is your chance to buy the invisible monopolies controlling AI, energy grids, and global finance. These 5 stocks here are the picks and shovels of the new economy, and they're absurdly cheap right now. But let me ask you something first. If you could go back to March 2020, would you buy Amazon at $95 or Apple at $50? The answer to that is yes. Write it in the chat, write it in the comments down below. And yeah, of course, I think so too. Well, the companies I'm about to share with you have the same monopolistic characteristics, yet they've been tossed aside in this panic. And for those of you here short on time, here is the essence. These 5 companies, from Palantir, Tesla, Amazon, Axon, and Cloudflare, there you have all the names. You now run away and say, I know it all. But they all have genuine monopolistic advantages, and they're trading at significant discounts because most investors don't understand their true market position. They're not just leaders, they are literally controlling the infrastructure that every other business depends on. Now consider this. When did Warren Buffett make his most profitable investments? Right, during periods of maximum pessimism. When did Ray Dalio build his fortune? During market dislocations where emotions override rational analysis. And what do we have right now? Well, since February 18th, the S&P has dropped over 5%. Small caps are down almost 10%. The CNN Fear and Greed Index hits 20, which is extreme fear territory.
That's interesting. So let's look at that real quick. Fear and Greed Index. The CNN Fear and Greed Index is currently sitting at, get my fat head out of the way, 19, extreme fear. That's so interesting because in Outlier, that's one of the things we measure is fear and greed. And I don't think we've seen fear yet. I don't think we're anywhere close to fear. Now, of course, we've definitely come off of greed and we might be having a little bit of fear, but like this max fear that we see over here, extreme fear, no way, bro. Like if we go to the SPY, yeah, it's down a bit and it's going to open down a bit this morning. But we haven't seen, let's compare this to COVID. Let's compare this to COVID. Right? That's extreme fear. That's when everybody's like, oh my gosh, this is scary. That is extreme fear right there. When it's down peak to trough, 35% in 22 days. That, my friends, is extreme fear. No way are we even close to that. Let's see over here. Yeah. We just started ticking into the fear on the S&P 500 right now. And even the components that make up the 500 stocks in the S&P 500, they're still slightly greedy, right? This is the market index itself. This is everything inside the index as an average. They're still slightly greedy. So no, we are nowhere close to extreme fear. No way. Oh yeah, Nathan says, they sell fear as a form of news. Okay, that makes total sense.
It's below that right now. And why? Mostly overblown concerns about tariffs and interest rates. Now, I'm very lucky. I've got Winston, my adopted golden retriever, and he sniffed out better economic indicators in the park this morning than what I'm hearing from most analysts, and quite frankly, he's right. In the current market environment with extreme bearish sentiment and tariff concerns dominating almost everything, most investors are retreating to defensive positions. However, this precisely creates the asymmetric opportunity to buy companies with this genuine monopolistic advantage at discounted valuations. And I'm going to walk you through these 5 here, and also when I would buy them and how I would time it. But ultimately, the real advantage that you have if you understand how the market patterns work, and there are really only 3 or 4 patterns in the market. And once it's been shown to you, it's like the matrix is unveiled. And how did I figure it out? I wasn't particularly smart. I didn't study this for decades. No, what I did is I got myself a job in a bank, and that's an unfair advantage, right? And then they teach you because they want you to make money for them. And then for the last 13 years or so, I've been trading for myself, and it's working pretty nicely. And for the last 4 years, or even 5, I've been sharing that knowledge with people because I just realized it's insanely unfair how 99% of people don't have those skills. They don't know how to spot those patterns, and then the very, very, very small minority does. So wouldn't it be nice if you could take all that information, 13 years of experience, all the screw ups, or the hundreds of thousands of dollars I paid on mentors, and you could just get that like for free? Wouldn't that be lovely? Well, that's exactly what I'm actually going to do for you.
In his masterclass, we know where that's going. Let's skip forward.
Health score here, which is extraordinary, but then you have that F in relative value. And the ticker is, of course, PLTR. And look at that, straight A's on cash flow and growth health. If you look at the health score here, which is extraordinary, but then you have that F in relative value, and that's what scares people. But that's actually our opportunity. The market is completely misunderstanding what this company actually does. Most investors, and I mean literally 90% of them, view Palantir through this narrow lens of government contractor or enterprise software company. But that's like calling Amazon a bookstore, right? It's just missing the bigger picture here. And what Palantir has actually become is essential critical infrastructure. And I don't use that term lightly, as it's embedding itself as the central nervous system across 4 critical domains here. First, national security. It's the traditional core business of Palantir. Second, the public health system, where it's becoming integrated into emergency responses. And then third, supply chain, which is massive given the current global disruptions in tariffs and everything else. And then fourth, and this is crucial, financial systems. Just yesterday, Palantir announced a partnership with Société Générale, or SocGen, as the Brits call it, just to piss off the French. They know it irritates them, which is one of Europe's largest banks. It's the most powerful French bank out there, the only decent investment bank that they have. And they're deploying Palantir's anti-financial crime solutions across their entire operations. And this isn't just another client win. Palantir is literally becoming the neural network protecting one of Europe's most important financial institutions. It's a great bank, by the way. One of my mentors worked there for like almost a decade, looking after and training their brokerage teams, and I'm very lucky I get to learn from them, as do my students, which is very, very cool, right? We get to like really learn what happens in Wall Street. But what most analysts get wrong here is, well, the current geopolitical, fragmentation, shall we call it like that, all these new trade barriers, nationalist policies, you know what? It's a massive tailwind for Palantir. It's not a headwind at all. Let me explain. As countries implement more protectionist policies,
I don't mind Felix in his investing style, because we're similar in that. But all this, I call it mumbo jumbo. All this mumbo jumbo about how great the company is, how great the stuff that they're doing is, all these new markets that they're doing, doesn't matter to me. Doesn't matter to me at all. The only thing that matters is the price going up? If the price is going up, that's where I want to be. Now, you're probably thinking, but Chris, how can you invest into a company not knowing all the stuff behind it? Does it matter? Right? I mean, we've seen so many videos about AMD, which might be one of his picks. I don't know. AMD, so many videos that we've covered talking about how great of a company AMD is. And it's down like 50% from these highs. It's been absolutely monkey hammered to death. Right? It's been monkey hammered to death. Let's see if we got a new sound yet. No, I think that was the same sound. Golden Oldies dog just freaked out. Sorry. But anyway, the stock has been monkey hammered to death. Palantir actually was in a huge run. And I did see a comment just a minute ago that I want to address on that. How do you invest in a stock in an uptrend? Keep buying as price goes up? Yeah. That sounds weird, right? It's super weird. In fact, Christopher Gaines, I believe his name was, yesterday said, would it be crazy to have a buy stop where when it reaches a certain level to buy it as it goes up? Like, for example, let's say you wanted to buy Palantir at $33, right? And you put in this levels like, okay, when it reaches $33, I'm in. Now, somebody who doesn't know how to trade would be like, well, that's stupid. Why would you buy it as the price is going up? This is why you'd buy it as the price is going up. This is why you'd buy it as the price is going up. Because when the momentum is at your back, when more people are buying it and the price is going up, you are actually making money. And that's the opposite when you look at most investors. But one thing too, like let's say you're in a retirement account and you keep adding to that retirement account week after week, year after year, and you're buying your target date fund or whatever, right? If your target date fund doesn't look like this, if your target date index fund doesn't look like this, do you actually think that you're going to retire at that point? Probably not. Because the entire time, let's say, for example, if it is going up, you're buying it as the price is getting higher. And that's the only way, at the end of the day, that you're going to make money. Because you know where I'm going with this. Only price pays. That's right, tradesman. Only price pays. So the only way that you're going to make money in that retirement account and that target date fund is if the price is going up. So yeah, you do want to be investing. You do want to be buying it on the way up. But on the other end, people are saying, oh, you want to buy it on the way down so you get such a deal. So you're lowering your average cost. But you could lower your average cost all the way down to 0 in some cases. And that certainly is not going to help you. But you could raise your average cost, and maybe it was at Palantir is a great example because it really had this huge bull run, but I could use anything. I could use SoFi that had a huge bull run right here, right? Let's say you wanted to buy SoFi at $8.53. That was a great time. Let's say you bought more and your average cost went up to $8.90 and your average cost went up to $9.50 and your average cost went up to $10 and your average cost went up to $11 per se. And you've got all this that's still working for you. Every bit of it is making money until it finds its top and starts coming back down. This is not the time to be buying into something because it's losing value. This is the time to be buying into something because it's gaining value. Think of it in a different term. Think of it in real estate. Do you really want to be buying real estate in a bad neighborhood, right? There's bullet holes all through the house. There's crack dealers on the corner and the house values are going down like this. Not me. I certainly don't. I certainly would not be investing in that house. But let's say you found a new neighborhood. It's a nice part of town. Lots of new schools going in, beautifully landscaped, new stores, new shops, all kinds of new entertainments going through. The value of that property is going up. I mean, if you transition and think about it from a real estate perspective, I know what I want to do. I know what I want to do. I want to be buying a house that's in a neighborhood where the home values are going up. In fact, I may use this analogy more often. I do not want to be buying the crack house. I do not, no offense to anybody in Detroit, but I'm not buying anything in Detroit. No way. I'm buying things in Texas because everybody wants to move to Texas and it looks like this. Just a fact. Just a fact. JG says, wait a minute, how do you know where I live? So I want to get to the point where he's talking about why he would buy these stocks, not just all the story behind them. Let's see if we can skip forward to each one of these.
To open the stock chart, that was usually helpful. And what do you see? Well, first of all, zoom out a little bit because it gives you a little bit of perspective and you're like, okay, this stock's actually had this tremendous rally. One little thing I always like to look at our breakouts because that's an insanely amazing indicator that we built. You know, you would have gotten in at $21 or at $28 or at $34 or here at $50.
The breakout is exactly what you would imagine. The price is going to, in fact, do I still have it? No. Just yesterday, we talked about Donchian channels. Donchian channels. This is a trading strategy that a lot of people have found a ton of success with, where when it goes to a new higher price, so for example, this setting was at 20, but let's put it at 50. Let's put it at 50. When it breaks to a new higher price over the last 50 days, that's a buy signal for that person. I'm not saying that that is for me, and I'm not saying that you should do that, but what I'm saying is that would be a buy signal, and look, and it can run. And of course, it doesn't always work, right? This one right here popped up, came back down, but then the very next time, a new high over the last 50 days, it ran for months. That's how the game is played. You want to be buying things as they're going up. Buy high and sell higher. I know it sounds crazy, but that's how the game is played.
Or maybe even up here at $103, but that's why you need an exit rule, right? Because you should have taken profits around about here at about $112 or so. And I'll teach you that if you join me on Thursday. So what do we do then with this dip? Well, the first thing you always want to do is have a look at where the institutional support sits. So there's a little support indicator here, tap on current. And what are you seeing? Well, it sits at $80 support. And guess what? We bounced off the $80 line here 2 days in a row. That's actually pretty good. So you want to make sure that that support line doesn't move further down. If it does, well, that's institutions telling you, we believe this is going to go further south, and they're shifting their positions down. So it's not a green line that we just draw in the sand for the fun of it. This is based on actual market positions because we have access to all the positions that are out there because we pay a lot for very, very cool data. So could this be the consolidation? It could be, but it's always a little too early to tell. We want to see a little bit of a V. We want to see a little bit of a rebound that brings us significantly back above this 50-day moving average line.
Well, 50-day moving average line. Where have we heard that before?
Like after hours as I'm recording this, we're trading slightly above it, but we want to close above that yellow line here, which I just popped open down here, the 50-day moving average line. So that's what I'm looking at here. So is it a time to buy the dip? I think almost. You see a little bit of a tick up, close above the 50-day, and I think it could be an interesting entry point here. Of course, you've got to come to your own conclusions and you have your own risk management and everything else.
Look at this. Felix and I actually do agree on a lot. I do like that very, very much.
Telling you what to buy. I'm just telling you the research that I've done and what I think it looks potentially attractive, but I don't know your situation. So let's talk about stock.
Yeah, maybe so. Maybe Felix watches our videos. Yeah, I only made 2,000 of them. I've only been on YouTube since like 2018, maybe 2017. So there's plenty to watch for sure, and nothing to hide. I'm as transparent as a book as it comes.
Numero 2, which is Amazon. And you might think, Felix, everyone knows about Amazon. But trust me, most investors are still viewing this company through an outdated lens. So let's check our metric card here. Not as impressive as Palantir at first glance, right? But those middle-of-the-road scores actually mask the two extraordinary monopolistic businesses hiding inside of Amazon. While everyone's focused on e-commerce and worried about tariffs, the real value driver is AWS, their cloud business, and their rapid...
Again, the all the story behind a stock, it just does nothing for me. I want to see where his levels are at. That's what I'm interested in. Now, for me on Amazon, this is very obviously a downtrend. I mean, you know the deal. The outlier trend template will tell you when the direction of the trend has changed, right? Your 10 under the 20, price under the 50 is very much a bearish, very, very bearish move right there. Very bearish trend. That's what I was trying to say. And you can see right here, as I've talked about before, the 10 EMA is a close for me, or I'd like to get out. And the very first time that it closed under this, right, you had a couple over-unders and it went up. The first time it closed under the 10 EMA and this little trend right here, that was the end. That was the end. I'm not saying it's every time, but anytime you see a close under the 10 EMA, that is a big red flag that things are not what they used to be, right? You've got this close over and move up, close under, things weren't what they used to be. A close over moves up, close under, things aren't what they used to be. So yeah, that's a real signal for me that I really want you to start bearing into the back of your mind at all times.
That most retail investors are completely missing right now, and our mission here is to open your eyes and teach you some rules and give you some real insight. And once again, I want to encourage you to come and join me on Thursday, because there we'll have like 2 hours of proper teaching.
Listen, you don't have to join Felix. I do this live twice a day, every day, except when I'm going to be on spring break in a couple weeks, and I don't charge you anything. If you want to get Outlier, that's cool. It's got lots of great data, but you don't have to pay me a single cent. And I certainly don't want your super chats, because I feel it's really dirty when people ask for money and a super chat, and then they only talk to you if they super chat. Yeah, no, thank you. But point is, like, I'm going to teach you as much as I know for free every day, as long as you just show up. That's all I ask. Show up and hit the like button.
Teaching with a little bit more time here than in a
Oh, Christopher, I was actually talking about you a couple minutes ago, my friend, talking about your idea of having that buy stop as the stock goes up through a certain level. In fact, let's look at Amazon. Great example right here, Christopher. I'm so glad you came on the live this morning. Imagine you wanted to buy Amazon at 215 and it came down and you're like, oh man, this sucks. But you say, you know what? If it comes back up to 215, I'm in. And you could get in and you could ride that trend up and take your profits wherever they come. Yeah, a buy stop to get in makes total sense.
Short video like this, because if I made this 2 hours, I don't think YouTube would be too happy with me. So where are we trading? Just over $200. Support level actually dumped all the way down to 190 here, and you can also see the historic support, and you can see that green line coming down, right, which isn't a good thing. So institutions are pushing this lower and lower and lower, and yeah, that's definitely tariff concerns. So are we still above the 50-day moving average line? Nope, we're below it, and it's sloping down. That's not good. What about the 150? Well, we managed to bounce off that yesterday, but we're very close to it. So you want to see a significant bounce off that, get that sort of V-shaped recovery going up here, and that's for me actually the real entry point at the moment. I think if you have a very long time horizon, it could be an interesting entry point, and that's another way of looking at things, because just look at the 150-day moving average line here. Let me get rid of all the other lines. That purple line there, right? The last time we were below that was when? It was in August. Was that a good buying opportunity? Would you like to have bought Amazon at 160? I probably would argue yes. What about down here in October of 2023? Well, you could have bought it at 120, and then you had a longer period here. And that's a little bit the danger with buying falling stocks, because you could have bought it at 170 and it was still falling all the way to 84. So I'm a big fan of buying it as we break up rather than as we break down. So I want to make sure that this breakdown is actually stopped and it's turned around into a breakout. And at the moment, we're not seeing a breakout yet. So I think it's a little too early. But yeah, if you have a 10, 20-year horizon, it's probably hard to go wrong with Amazon. But you obviously have to come to your own conclusion on that one. Now let's move on to Tesla. All
right, so basically he's saying wait for a cross under a moving average and then a cross back over. That is such a great low risk entry plan. Let's go back to VU for Eileen. In fact, no. She wants to look at LLY. We'll do that. We'll do the same example here on LLY, on Eli Lilly. Let's say you want to be a long-term holder. Here, this is hard to do, by the way. This is actually really hard to do. Let's say, I know someone talked about they had a 200 grand that they want to put into the market. First, you need to wait. You need to wait until you get a close under your moving average, whatever that moving average is. Let's say it's a 50. When you get a close under that, that's when your radar needs to be on. Like, okay, I'm waiting. I want to see. You get a close over it. That actually would be an entry point. Now, remember, we can't see the right-hand side of the chart. But let's say if we're just following the 50 EMA, we can't see the 10 and 20. Can't see the 10 and 20. Can't see the 10 and 20. Can't see the right-hand side of the chart unless we get the Nancy Pelosi special. And then it comes back down. You might have lost a penny or two. Let's see how much you would have lost, close to close. 2% right there. Came back down. First close back over the 50 period moving average. Here, where did it close under again? Here. You made 9%. All right. And you've made, in the span of like 6 months, or how long was that? July to September, 4 months, give or take. You've made 2 trades. Close over again right here to a close under. And you're out a few pennies. No big deal. 82 basis points. And then you just wait. And then you wait. And then you wait until you get that close back over your moving average right here. And you can run it up. And there's 14% right there. Right? Like, that's free. That's free. You don't need any, you need one line on your chart. One. To do something like this. Long-term holder, this is a very viable strategy. But you can't just get in willy-nilly, right? You can't get in willy-nilly. You can't get in at any old time. You need to wait until you get that exact signal of a close above your moving average, because this is where you limit your risk. Here, click for me. Here we go. So your risk in this trade would be about 2% to get in. So you're risking 2% here to get back to that 50 moving average, but you made 14%. That's a 7-to-1 risk return. That's pretty sweet to me. And again, a close right over helps you keep your risk in check, right? Because your risk is just that much. Your risk is just that much. It's not getting in and saying, oh, I'm going to wait until it gets back to the 50 period moving average, because, like, let's say, for example, you got in right here. That risk was 8% of risk. Do you see why you wait until you get that close right over? The close right over gives you a small amount of risk to get in. If you wait to get in later on, then you've got a lot more risk to the point where you're going to exit, right? And we want to minimize that risk. We want to find out as fast as possible with as least cost as possible to find out if the trend is going to continue on or if the trend is going to reverse. And that's why I say you might make a buck, you might lose a buck here and there. But when you're in the trend and the trend goes, bro, you can let it run for months without doing anything. Oh yeah, Tesla. Let's see.
This is probably the most misunderstood company in our entire list. Let's look at the scorecard first. That F and relative value, well, that's because the market is valuing Tesla as a car company facing margin pressure. But that's completely missing what Tesla is actually becoming. The recent price action in Tesla shares reflects an obsession with automotive margins and EV competition and Elon's political opinions, but most investors are missing this. Tesla is not just a car company. I said it. It's orchestrating an energy revolution.
Tesla's down another 5% today. Another 5% today. This is such a stage 4 classic downtrend that it's going to round trip. It has now round tripped from October all the way up, back down. How much was that? It has now round tripped from October, let's call it right there, to here. It has now round tripped a 92% gain up, 45% back down. 92% gain is gone. And then people say Tesla's a great buy right now. Even our friend Tom Nash says Tesla's a great buy right here. You just watched a 92% gain evaporate. It is gone. And this is the point where you want to get in? No way. No way. This is... Now, I own a Tesla. But if I own Tesla stock, I would be sick to my stomach seeing something like this. So let's see where Felix would get in.
It could be far more valuable than its automotive business. Just on March 4th, Tesla deployed its 150-day moving average line, right? We're below it. That's pretty bad from a momentum kind of point of view. The last time we were below that was in early 2024, and we were below that from December all the way to July, and another little dip there in August. And that was sort of the consolidation phase before the big breakout, which we called here on November 2024, one day after the election, right? 270.
November 2024. I mean, it's not like it's that unobvious, right? November, the day after the election, like this. Yeah, right there. The day after the election. Let me remove this one real quick. Remove. Yeah, that is a breakout, no doubt whatsoever. And as Christopher would say, have that buy stop to get in as it goes over. And how many times did it go under its 10 moving average? It got up, it ran. It might have closed right under there. That's a judgment call because it's so close. But it ran, closed under its 10 EMA right here. And like I said just a little bit ago, things are different at that point. Things are different. Isn't it cool? Don't you feel like you can actually read the market right now? Type an R in the chat if you feel like you can actually read what the market is telling you. Because this, if you want to think about it, this is a history book. And now you're learning the language of what is inside the history book. So type an R in the chat if it makes sense to you.
$56. Now, we're basically back to that level. So you could have been like, oh, the breakout doesn't work. Well, you could have sold up there, which is what I'll teach you on Thursday. But not everybody does, and that's okay. It's also something that you could potentially hold for a very, very long time. I have a bullish Tesla positions open, I should mention that. But what are we seeing right here isn't very pretty, and that's because the stock's coming down and volume is picking up. So more and more people are selling, and that's, of course, a problem. It creates this sort of spiral thing where more people are dumping the stock. Just in the year when they are transitioning from car company to self-driving, robo-taxis, robots, energy business, everything is actually coming together very nicely. Elon came out just and said he thinks 1,000% improvement in profit margins and profit earnings per share is possible if they get it right in the next 5 years. Yet people are selling this. And it just shows to you that everyone's just selling off everything, regardless of what it is. And then, of course, some people have political.
Right. And when people sell off everything, it's exactly this. It's where's my slide? It's exactly this. Everybody scream and sell, right? This is trends. This is trends in a nutshell, right? These people are the ones who are making this happen. And that's okay. It's okay. It's how the game works. This is how the market works. And this is okay because now you understand that you don't have to hold things long term. You can throw one moving average, or you can do the whole outlier trend template, and you can see a lot more of what's going on. But that's what's going on right there, is everybody scream and sell. And I certainly want to be in the crowd as it's going down, rather than being the one guy who's like, no, I know better. I have 800,000 followers on YouTube, and I have these bags that I'm holding, and I need to pump up the stock because it continues to go down like AMD every single day, which is now a $99 stock, or Elf, which as you can see was absolutely monkey hammered, and the list goes on and on. I think that these big YouTube channels who pump these stocks that are just going down and down and down day after day after day probably are like, you know what, I got to do something about this. I am losing money hand over fist, and if I can get just a handful of people to start buying, maybe that'll start the rollover right here from sellers to buyers, and maybe I can get out of this stock, this hot garbage of a stock, with a little bit of money in my pocket. But it's not working. It's not working. You guys know what I'm talking about. Shane says, in another Discord server, the coach was saying the dip was over and to buy. But Shane knows because he's got the outlier trend template. He knows for sure.
Use on that. I'd always say, don't let your politics get in the way of making money. They're two different things. So next up, we have Axon Enterprises. Ticker is AXON. And this is a company that, again, most investors misunderstand. So let's check out the scorecard here. Solid Bs across most metrics, but again, that F in relative value, which represents our.
I don't think he's actually planning on buying any of these. I really don't. I think this is absolutely such a clickbait title. I think he's just found several stocks that get a lot of clicks, and he's like, I don't plan to be buying any of these until they start coming back up. But in the meantime, this is a great video, But yeah, Axon looks terrible. By the way, another example of a gap and crap. So Axon started its downtrend. It gapped up on earnings, and you put the one line on the bottom of that candle. And then if it breaks through that candle, that's a gap and crap. We see that right there. You guys are learning so much by coming here every day. Okay, I'm going to be done with this video. What's his fourth pick was Axon. His fifth pick was, what's his fifth pick? I can't see it.
One more, Cloudflare. Ticker symbol is NET. And again, it's
Cloudflare net. This one actually is on a crazy run right now. Or it was. Actually, this is one I saw in Outlier that had like a top maxed out greed score, I think, a few days ago. Yeah. Check this out. This is rare. So we got the sell signal February 5th when it had a G49, a greed value of 49. Oh, hang on, you can't see that. Greed value of 49. It went up a bit further. G value maxed out at 50. Absolutely maxed out the greed value. What happened? Smoked. It got smoked. It got, as we know, it got totally monkey hammered. And that's why I say, when you see a stock, the further that the greed value is, the further it expands, the more likely it is to snap back like a rubber band. Isn't that cool? Man, like having this data is super, super cool. I love this. By the way, we are going to be changing a few things. We had a meeting yesterday. The heat map is no longer going to be from R to G. It's actually going to be F to G. So fear to greed instead of red to green, fear to greed. So that'd be cool. So also, I believe we might be changing that from 0 to 100 rather than saying R 0 to 50, G 0 to 50. It might be just a 0 to 100 scale. I believe that was the consensus we came out with. So I'm excited. I think that'll make that a little bit easier to read. Wayne's got some strong words about Jeremy over there, but you know what? I didn't introduce myself. I know I'm just some random guy who wears a hat because he dropped his son off at school and hasn't showered yet, and he's going to shower after he goes to the gym. But my name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already, and let's go ahead and rank this video. Where would you rank it? Where would you rank it? Now, as you're typing that up, I want to give you a little opinion of mine. I kind of feel like a dick when we rank these. I'm debating on getting rid of the rankings because like most of the videos that we've been covering lately, which seems to be everything on finance YouTube, has been bad. Has been real bad. And I kind of just say, maybe we get rid of it. I don't know. I'm just thinking about it. Rando hat guy in a blue blazer. Exactly. A random guy in a blue blazer. Yakov says a 2. Charles says a 4. Alana, another girl. What are we doing here? This is so crazy. What are we going to do with all these girls? I'm so glad I found you. I dumped all my losers that I was holding the other day. I'm so tired of getting monkey hammered. This makes so much more sense to me. Awesome. I'm glad to hear that. Thanks for being here. We got 6s. Davis says no. Someone's going to throw a 7. I'm looking for it. I know you are. I'm just waiting for it. Sarah has a 5. S&B Capital, rate them. They are on my list. They are on my list. Raider Trader is also on my list as well. Graham says 3. Chad says 5. I'm the only YouTuber saying not to buy. Yeah. Why would you buy right now? No way. 6, lots of 6s. I think 6 is going to be the number for the day. There it is. Nobody gets a 7. Oh, because he's wanting for I saw the hoods coming through. Okay, we can look at hoods. Don't forget. Okay, don't forget. Do y'all like the ranking though? Keep the ranking. Definitely a 6.999.9. Steve says 5. Jim says you need to find a video from a financial YouTuber nobody so they can finally get their well-deserved 7. I like that. 7 plus 1 for the accent. 5s. Okay. For Felix, I feel like I agree with you guys. Let me get a screen cap of that. And let's see. Yeah, because dude's not buying any of these. He's really not. But he does talk about not buying the dip, which I really approve. So I'm going to throw this in B tier. I'm going to put it between the 5s and the 6s. Warrior Trader's on my list. He's on my list. I just haven't seen anything for him. Add 0 for cringy. It happens. Review is good, but no ranking. See, I'm kind of feeling that too. I'm kind of feeling it too. But also, like Justin says, ranking makes it fun. I just don't want to be a dick about it, right? But I mean, there are times where it's just like, this is really bad. So I don't know. We might change it. We might not. But I do have a question for you. What do you think? Over on my YouTube channel, we put out this poll this morning. Good to see you again. I think ranking is just good fun. No harm to anybody. Okay. So poll of the day. A simple strategy executed well will always outperform a complex strategy executed poorly. What do you think? Do you think, yes, simple strategies work best, or nope, complex strategies can pay off big? Now, I'm a little bit torn on this because I've given you a very simple strategy this morning, and I want you to go vote. I've given you a very simple strategy this morning of just using the 50 period EMA. That's super simple. And it works because it keeps you in when it's going up. It gets you out when the market's going down. And you might win a buck or lose a buck in the meantime when it chops around. But the point is that when it's working, you can make buttloads of money and not touch it for months at a time. But then again, my strategy is a lot more complex than that, actually. I mean, my strategy involves lots of steps, right? I've got the market trend, market breadth, outlier screeners, chart screeners, different things on the options chain, getting the position size correctly. But personally, I don't know. I want to see what your vote is, and we can look at that in just a little bit. But go ahead and start putting your stocks in the chat. We'll start looking at those. And don't forget, while you're putting your stocks in the chat, you can get 64% off the Outlier annual plan. That's just 82 cents a day over at outlier.com. And if you're in the middle of your trial period, just shoot us an email that you want to upgrade, and we'll take it from there. So put your stocks in the chat, and let's start taking a look at those after you voted, because I do want to go through those votes in just a minute. Okay, let's close a few of these down. All right. So first one of the day, Charles with the DB. Charles W with the DB. Ooh, wow. Look at that. Big move up. Buy signal came February 21st. Heat map was at G25. Got a lot more greedy. Probably had earnings or something right there. Let's take a look at it on the chart over here, DB. Yeah, so we've got some sort of news that came out. So do me a favor, Charles. Put a line on the bottom of this right here for this gap. If it continues on, that's awesome. But if it breaks through this line right here, I would not be holding it. Also, the market is getting weaker. If the market's getting weaker and you've got a stock like this that is super strong while the market is getting weaker, it could absolutely slingshot even higher. You never really know where that's going to go if the market turns around. But just keep that in mind. That's a pretty good one right there. I don't see any order blocks in the way. Hood, there it is. I got you. Hood. All right. So from a short perspective, you got your 10 under 20, price is under the 50. It's sitting inside this order block right here. If it breaks down through the order block under 44, that may be an opportunity to get through it. Let's take a look at it in Outlier real quick. Oh, Charles asked what price was that. Let's go back to it real quick for Charles. The price was $22.89. $22.89. Let's go back to Hood. Okay, Hood. Like I say, it's sitting inside this order block. That gives me a bit of hesitation here. We did get a sell signal. Man, almost exact top on Hood. Let's take a look at that. Look at this. Oh, it happened on that gap up right here. It was on this date. Oh, here's a gap and crap. Perfect. Earnings, gap up, crapped back down. Isn't this cool? Isn't this cool when you guys can you can see that? You can identify what a gap and crap looks like. You can identify moving averages, what it means. But isn't it cool to be able to see this kind of stuff on the chart and understand how to read it? So yeah, you got your gap and crap right there. Sell signal, it's definitely getting more fearful. The financial sector is starting to move out of greed, starting to get into the fear. Yeah, for me, this looks like a short opportunity, but not until it gets below 43-ish, 42.50, 43-ish area. Then I would be interested, but not until that point. Not until it breaks through this order block right here. Good one. Alex wants to look at HIMS. Down 10% this morning. Down 9.88% right now. Jeez Louise. HIMS. I know we got this in the dashboard here. HIMS. Oof. All right, HIMS moved way up here. So we got a buy signal a while ago, obviously. And we got the sell signal came through after this gap down on February 21st. So it got really, really, really greedy. Max heat map value of 48. Bro, if you're still sitting on something with a fear and greed score of 48 out of 50, you're just asking to be whipsawed right back out of it. And that's exactly what happened. Now the staples sector is getting more greedy, but HIMS like absolutely peaked. And you can see right there, first close under the 10. That's when the sell signal came. And then things aren't the same anymore. This one actually would be a nice short opportunity underneath 35.85. But like I say, the sell signal came a while back, so it's not one that I would be looking for a sell signal on anytime soon because it already has that. Megatroy, I got out 55 thanks to Chris on Hims. You're welcome. You got out 55. That was way back up here, my friend. It's 37 now. I saved you only 30% down move. You're welcome. You can pay me back by telling everybody about it. Hang on. SCCO is going back up. Is it? Now, for those of you who weren't following, oh, look at that. Yes. Okay, good. I was going to feel really dumb, and I hate feeling dumb, but it's just part of the game sometimes. So SCCO, I bought puts on. It went down the next day. It came back up. I closed it yesterday because it closed above my stop loss point at the half ATR. Took a small loss on it. My results for the year, just so we're 1,000% transparent. Hold tight, it's loading. My results for the year, I'm down 64 basis points. Right. I've won 2, I've lost 2, and I'm down 64 basis points. But I'll tell you right now, I'm beating the SPY, which is down nearly 2% right now. And I'm okay with that. Right. I've only had 4 trades set up so far this year. I've won 2 and I've lost 2. But yet my account is still basically what it was at the beginning of the year. And I'm not stressed and I'm not worried. And there's going to be lots of opportunities that come through. So being down 64 basis points, I can live with that. And that is all due to position sizing. All due to position sizing. That's why I can survive. SCCO, it looks like it's going to run. I don't know where it's going to stop. It does have this order block right here. But yeah, SCCO, we're no longer friends, SCCO. ABBV, ABV. Oh, look at that. Beautiful trend right there. Beautiful trend. And how many times has it closed under the 10 moving average? 0. You got a gap up at earnings, a gap and go, a gap and go. All right, got the buy signal. That must be what I marked right there. On February 4th, I'd bet. Yeah, February 4th. And then, as you can see, it's run. Now, it's getting really greedy. It's up at 42. I would not be surprised to see AbbVie snap back soon. So I would be looking to take profits. If you want a trailing stop to follow, following that 10 EMA might be a great place. The slope of any moving average line is dependent on future unknown prices. That is factually wrong, Pam. The moving average is the average of the last number of prices. Just a fact, right? So this is the 10 moving average. This is the average of the last 10 days of prices. So it has nothing to do with future prices at all. Does not show an accurate representation of how moving averages appeared at past moments. I'm really not sure where you're going with that, but I will say that a close above this is bullish. This is only measuring history. It's just saying the close of the last 10 candles is going up. The close of the last 20 candles, the close of the last 50 candles. So Graham, could the chart open at 3 months instead of max? The chart, we do have some upgrades that are planned in the next few weeks. In fact, there's going to be a big upgrade on Monday. The charts are going to default to 1 year to start with. 1 year to start with. Does it work on mobile devices or only for desktop? Oh yeah, it totally works on it. It's not as seamless on a mobile device, but it absolutely does work on mobile devices. Good question. And Paul says it works on his iPad. Very cool. All right. Hadrig wants to look at COGT. Oh, Rick says it does work quite well on mobile. Cool. Thanks, Rick. So let's change gears a little bit. Let's go back to see how you voted on the strategy part, on the strategy question. I'm genuinely curious because I could go both ways. All right, so simple strategies work best. Complex strategies can pay off big. Like I say, I could feel either one of those to be true. But 92% of y'all say simple strategies work best. So I really, really, really appreciate you taking the time to vote. Of course, be sure to tell me what you're trading in the chat and come back tomorrow where outliers like us will save time, make money, and start winning with less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. I recommend you watch one of those. And I also recommend you have a fantastic day and come to this afternoon's live stream. We'll talk soon.